Hello traders, going to have a look today at some price action trading. So we're going to have a look at the FTSE 5-minute chart, have a look what sort of trading opportunities we got on this day. And the day that we're looking at is Friday the 24th of June. This is the pre-market trading. What you can't see from the chart is that this is the day that the UK left the EU. So following the referendum, the UK left the EU, and you can see that pre-market trading, the market just tanked. It just carried on going down as you would expect. Bear in mind that the market had anticipated the UK staying in the EU, so it was quite a big shock around about midnight when it became obvious that the UK was going to be voting to leave the EU. So approaching 8 o'clock, what are you thinking? Are you thinking more of the same? Most probably anticipating the market continue going down. Well, let's have a look at what happened. Well, we had an up day, surprisingly enough. Now, whether this was due to some intervention from the central bank, ploughing funds into the markets, I'm not sure at this stage, but basically the market rose. So this teaches us a lesson from the start, and the lesson is that we're not trading fundamentals on the 5-minute time frame. We're trading price action. We're seeing what unravels in terms of price action, and we're looking for trading opportunities. So let's have a look at what trading opportunities there may have been on this particular day. And I think we can probably identify 5 different areas that the market, and phases that the market went through during this particular day. Now, we're talking about hugely volatile price action here, hugely volatile. I don't know whether you can see the faint horizontal lines, but between each line you've got 50 points. And bear in mind that normally you'd be looking at, on a FTSE chart, you'd be looking at probably 5 or 10 points between these lines. So hugely volatile, mega high average true range on this particular day. So let's have a look at the opportunities as and when they arise. So we're watching the open, and this is the open at 8 o'clock. The market went down slightly, but you can see that it had been trading within a range at this point in time. And this was the 10-minute period leading up to 8 o'clock, the raw price action during this period. So you can see that actually it had been producing we had a double bottom coming into 8 o'clock and perhaps a triple bottom. Okay, so this is the build-up. This is a build-up phase in the market. Get them every day. And I used to sit there during these phases and get frustrated because nothing was particularly happening, couldn't help me predict what was going to happen. Now I'm just watching, I'm getting curious, and the market's getting exciting. It's going up, it's going down. There's a battle between the bulls and the bears. Who's going to win? Well, as you can see on this particular occasion, the bulls won. Is it predictable? Well, let's just have a look. So you can see that we can draw a trend line, a rising trend line predicting a rise. So what do we get? Well, at the top we're within a range. So again, we can think, okay, so if it breaks out from this range, let's have a look if there are any opportunities. And there's a range at the bottom as well. So if it goes down, then we're going to be looking and seeing what candlesticks we get that may offer opportunities. And we got, at 8:05, we got an engulfing candle. Engulfing candles at 8 o'clock or 8:05 aren't unusual because this is when the market's at its most volatile. However, on this particular day, that engulfing candle was really interesting because it rose above the top of the range, came back, bounced off the range, and started rising. So there's your opportunity. This is when the support, previous support, becomes resistance very temporarily. and it actually offers you a 100-point trade there. Looking at the second phase here, okay, what's happening? So we're in a trade, we're long in a trade, and produces a pin bar. The market produces a pin bar, and then it produces inside bars. Okay, this is telling us something. So we're trying to read the market, we're trying to listen, we're listening and we're watching and we're saying, okay, what is the market telling us? What's it showing us? What sentiment is there in the market? Pin bars indicate resistance. So in this case it's a resistance to the move down, and the inside bars indicate indecision. So there's indecision in the market. Which way is it going to go? Well, in the end, it produced a J-hook pattern, as you can see here, and so that's another opportunity for a long trade at that point in time. So the third area of interest here, right at the top of this particular trend, you can see that we could have picked the top perhaps by noticing a debatable pipe top. So pipe top chart pattern. There was an initial trend line that could have been drawn, which was broken. There's a more gradual trend line. This is indicating the market may be topping out. So could we have predicted the top there? Perhaps we could. And then the market pulls back. It pulls back, and where does it pull back to? Well, it pulls back to previous support, and it produces a hammer, another pin bar type. You can see 3 bars at the bottom there, each of them small in comparison to the rest of the bars on the chart. The market's just easing in volatility at this point in time, and it produces 2 pin bars, a double pin, which means it's going up. So the fourth area, less volatile during this stage. This is not unusual, of course, because it's the mid-morning and lunchtime session on the FTSE, still produces trading opportunities. Let's have a look at that. So you can see that when the market pulls back, where does it pull back to? Well, it pulls back to previous support again, and it pulls back to about 60% of the move, the prior move up. Spelling out opportunities. There's another inside bar in there, and it rises. The market rises, it rises, and then gradually pulls back with 3-4 bearish bars, the latter one being a hammer, and the hammer appears at, again, a previous resistance level, so resistance becoming support, and you get your hammer. Perfectly tradable opportunity after that as well. Okay, so having a look at the fifth area of price action. And what's this? Well, this is a double top. You can see the M shape there. It's got a lower second top, which is what we use to indicate a double top very often. And we've got build up. We've got build up on the second leg of the double top. You can see the green bars, the red bars, green bar, red bar, that's build up. The build up often ends with a pop, i.e. the price pops out of the build up. And is that predictable? Well, you can see the indecision bar, the inside bar at the top there, followed by a very bearish bar and another very bearish bar which breaks the support. The market then bounces up again, and very slightly, and then goes down. And that also coincides with the market falling below the middle of the double top. So there's your trading opportunity there. So hugely volatile day on the market. Was it exceptional? Well, it was exceptional in terms of the volatility. However, no need to work in any way that you don't normally work apply the same principles, reduce your position sizes according to the volatility, and it's still highly tradable. Still highly tradable. So, hope you found that useful. That's price action trading on the FTSE on the 24th of June 2016, the day the UK left the EU. And I'll speak to you again soon.